To qualify as a deductible business expense, a cost must meet two key criteria. It must be ordinary. This means the expense is common and accepted in the specific industry or line of work. It must be necessary. While not required to be indispensable, the expense should be helpful and appropriate for running the business. A wide range of expenses can be deducted, including office supplies, advertising costs, business travel, professional services, and even a portion of internet and phone bills if they are used for business purposes. For those who work from home, a portion of household expenses, such as utilities and rent, may also qualify if they meet home office deduction requirements. Business meals can also be deducted, provided they are directly related to business activities. In most cases, 50% of the cost of meals with clients, partners, or employees is deductible, as long as the expense is properly documented. Keeping receipts and noting the purpose of the meal and those in attendance is crucial to ensuring compliance with IRS regulations. Travel expenses related to business, such as airfare, lodging, and transportation, can also be deducted, provided they are necessary for conducting business. However, personal expenses incurred during business travel, such as sightseeing or entertainment, are not eligible for deduction. Proper record keeping is essential to claim business expense deductions effectively. Maintaining receipts, invoices, and financial records helps substantiate deductions in the event of an IRS audit. Using accounting software or consulting a tax professional can help ensure that all eligible expenses are accurately recorded and applied. For business owners and self-employed individuals, taking full advantage of deductible expenses is a strategic way to reduce taxable income while covering the necessary costs of running a business. By understanding which expenses qualify and keeping thorough documentation, taxpayers can ensure they maximize their deductions while staying compliant with tax laws. This might be a basic method, but it has been proven to be very effective. Fourthly, mileage deduction, turning your car into a tax-saving machine. For anyone who uses their personal vehicle for business, the IRS offers a valuable tax break, the mileage deduction. This deduction allows business owners, freelancers, and self-employed individuals to write off a portion of their driving expenses, helping to reduce their taxable income. Now, before anyone gets any ideas, no, your daily commute to work doesn't count. The IRS is pretty firm on that one. However, if you're driving to meet clients, running business-related errands, or traveling to a work site, those miles can be deducted. Essentially, if your car is putting in the work, it deserves a little tax break. There are two ways to calculate the deduction. The standard mileage rate. The IRS sets a fixed rate per mile driven for business purposes. For 2024, this rate is 67 cents per mile. And yes, that extra cent counts when you're racking up hundreds of miles. So if you drive 1,000 miles for business, that's a $670 deduction. Not bad for simply tracking your trips.